Ladies and gentlemen, welcome to the Big Tech Frenzy. Okay, there we go. The mic should be much better now. There we go. How is everyone doing? We have another red-ish market. Let's talk about it. So, essentially, what we ended up seeing today, unlike other days in the market here, is that yesterday we had an unbelievable red market and then continued into the aftermarkets. And everyone was saying this is going to be a terrible period that's going to continue for months. We'll see. What we ended up seeing was a large sell-off whenever the market opened, as you can see on the 1 minute chart here, and then to quickly recover and sort of closing right back where it was, at least for Nvidia. Whenever we start looking at SoFi, for example, we also saw a very similar trend, and that was kind of across many companies that were in the markets. Regardless of if you were green today, that's not necessarily the case for what happened from open at the beginning, crashing once again during the day and then recovering. So, while I appreciate a lot of people, and we still are red, so I'm not going to count my victory too early, but the idea that this is just automatically, we see one red day and this is the start of a correction. And many people in the markets yesterday saying that we are now going to have a minus 10% drawdown on the S&P 500. I think it's too early to call. Okay. I understand that having a little red moment sucks from time to time, especially if you're playing in levered, investment vehicles or these sort of things. But this is exactly why I don't do those sort of plays. I like to sell covered calls, potentially cash secured puts for picking up stocks that I like and getting paid for buying stocks that I like at a price that I would be happy with purchasing it at. But on the actual buying of options, I don't take part in, and levered ETFs or even inverse ETFs to take advantage of some of these drawdowns, I'm also not going to be playing in as well. That being said, we're going to continue to watch the market. It still was red at the end of the day for names like SoFi. However, it could have been a lot worse. At one point in the day, we dropped almost into the $20, into 21 something, I think was the bottom of the day, intraday low. But ended up closing out at 22.52 is not bad at all. Remember, we're in here for a long period. If you guys are watching the channel, that's usually how people get involved in watching this channel, is that you're usually a long-term investor, fundamentally, or with a fundamental mindset, and that's perfectly fine. Now, if you do think it's seasonality, how do you want to play that? I mean, this is what we talked about yesterday, but my opinion is that if there is going to be a blip, that's exactly what it is, a blip, right? Tom Lee is actually under the belief that the blip is over. So he said that, equities are almost following crypto now, and crypto saw its recovery yesterday. So we're seeing it today. And yeah, that being said, yesterday I also talked a lot about AI innovation and why I think that there are things going on in the market and then the technology that I like to follow, or the technologies that I like to follow, and how as those continue to progress, that's why I also believe that we're going to see increasing earnings, whether or not there is a strong or weak, user, which absolutely ultimately affects how much a company can grow by. The technologies and the margins that you're getting those revenues by is another way to look at things as well. And so I was just doing a little bit of reading today about the impacts of artificial intelligence that many companies have employed. And the one that continued to stick out, by the way, was Amazon. There were a bunch of companies that had artificial intelligence for different aspects of their business. Amazon has it across the board. So just to go through some, they use artificial intelligence to help with inventory management optimization. And word for word, Amazon uses AI to forecast demand and manage inventory across its vast network of warehouses. Machine learning models analyze historical sales data, seasonal trends, and market conditions to ensure optimal stock levels, reducing overstock and stock outs, minimizing storage costs, and reduces waste for unsold inventory. They do dynamic pricing with AI. Amazon's AI algorithm adjusts product pricing in real time based on competitive pricing demands. So I'm not going to read out all of the, the reasons for why they're using artificial intelligence, but sometimes we say the word AI, and AI is such a buzzword that people people immediately just say, oh, well, what does that mean? Okay, so if I could just go through and you tell me if this is beneficial or not to Amazon. And whenever I say beneficial, I mean legitimately not able to be done before. I mean there was some level of human coded software to try to, put some of this out, but it's not as dynamic, it's not reactive, it's not as accurate. So anyway, currently they're using, and these are just some examples, AI for inventory management optimization, dynamic pricing, fraud detection and prevention, supply chain and logistics optimization, personalized customer recommendations, and AI customer service with chatbots. Remember, as these models get smarter, the more useful they're going to end up being, right? So they're going to catch fraud more often. They're going to be able to answer customer service questions more frequently, not just in a list of frequently asked questions, but in a broader and more specific way. Predictive maintenance for equipment, AI optimized advertising campaigns, energy efficiency in their data centers, AI powered, warehouse automation, like through their AI robots and stuff. So, which specifically was in their Deep Fleet model, which is what they just released. But that's just Amazon. That's just one individual company. General Motors is employing AI for predictive maintenance. Walmart's using AI for supply chain optimization. Cleveland Clinic is using AI to automate administrative tasks and manage patient inquiries through an AI-driven patient portal. Procter & Gamble is using AI to analyze product processes, identifying areas of material waste. AI-driven improvements optimize resource usage and reducing raw materials and disposal costs. JP Morgan is leveraging it for fraud detection, and they actually came out and said that they have over 1,000 different use cases for artificial intelligence that are in action today. Airbnb is using AI to generate listing summaries, analyze guest behavior, and provide personal recommendations, increasing the conversion rates on customers choosing an actual spot to, have their Airbnb in. And so, what does this do for these companies? Well, in Airbnb's case, that improves revenue. If there was going to be someone that potentially was just browsing, if you can potentially offer them exactly what they want, then they might end up converting and they wouldn't have previously. Okay. If you can also answer their customer acquisition or their customer service questions without having a human involved, then you're not paying someone, $30-$40 an hour to answer those questions by having a customer service center here in America. You're having some GPU in Amazon, like AWS's warehouse to answer their question instead. And all of these things go to improve revenue, lower costs, and make these companies more efficient over time. And at the fastest rate of deployment that we've ever seen, in capital history. So, because it's all digital deployments, right? That's the whole thing. We set up these data centers, but then we're offering these tools through the cloud. So it's instant deployment of software through computers that are set up elsewhere. Why NVIDIA is the number one company in the world. So whenever there is sell-offs, I have to remember what is happening. Why was the market bullish to begin with, and has that changed? Okay. If I'm going to specifically point out for companies like Amazon, for example, or Meta or OpenAI or something like this, is that there's been some comments about, okay, well, we're breaking up our AI divisions or something like this. Or Sam Altman made a comment about how private markets have some companies that are a little bit too bullish on artificial intelligence, and maybe some people are getting ahead of themselves. But is that really what's happening in public markets whenever the Mag 7 is trading at 30 plus times price to earnings? I mean, it's higher than the S&P 500 generally, but you're also seeing faster levels of growth. You're seeing better margins. You're seeing tighter headcounts. So yeah. Is that Moo? Yeah, it is Moo. I don't use it to trade right now, but I do use it for the charts on the stream just because I find it very clear and I like the line graphs. Did I sell out of Airbnb? No. Is he talking about SoFi again? I wasn't, but yeah, overall, SoFi's doing well. There were a couple small things with SoFi today about job listings and stuff, but really, I don't think that it was anything that was too important to point out. Nothing too crazy. SoFi got 3 different price upgrades in this bear market. Are you kidding me? That's insane. Let's go take a look. Seems like a pretty bearish market to give out price upgrades. I'm kidding. I kid. Yes, Citigroup upgraded SoFi's price from $18 to $28 per share. JP Morgan changed their price from $22 to $24 per share. And Mizuho Securities, Dan Dolev, has been on the channel a few times, has changed his price from $18 to $28 per share. That's very interesting. I'm just seeing this now. I didn't actually catch that news today. Yeah, those were all the recent upgrades in the face of this terrible macro that the market is fleeing from and getting rid of big tech or growth names, I should say, not big tech. I should have said growth names. Misspoke. Crazy. Yeah, no, but I've been saying this. I think that the market is still trying to realize what just happened in Q2 of 2025. It was a complete rewriting of the company. That's why I'm back to buying. Hood and NVIDIA resilient? No, I mean, I think real fundamental strong businesses are resilient. Okay. And what's funny is I think that there still is companies that are out there that are very, very expensive. And I actually think it leans more towards the defensive names that I find, very expensive. What's so funny is where you saw all those growth names skyrocketing down in the morning, you saw things like, Costco have a big bump up this morning and everything. I think Costco is way too expensive. Why am I paying a 56 times price to earnings for their growth whenever I can get essentially the exact same PE for NVIDIA? What's NVIDIA's not forward PE? Yeah, their trailing PE is 56 times. Like, what are we talking? Costco versus NVIDIA? Really? One's growing, I think, at like 9%, and the other one is growing at 68% on a year-over-year basis. So you need a whole lot of 9% growth years in order to pay off what NVIDIA does in a single year. And that's if it doesn't continue to climb. Palantir scares me. I mean, if you're an ultra bull on Palantir, I would not even worry. Costco is resilient to a downturn because more people will shop there since it's cheaper. So it's a built-in hedge that people pay a premium for. It's still 9%. So what? Whenever there's a downturn, we see 68%, or are we going to see 9%? And still probably even lower during a downturn. I mean, I understand it's cheaper, and it is definitely a defensive company, and I'm a premium user. I've got the whole credit card and everything. I love Costco. I shop there often. Okay. But there should be a premium to the margin. What's the margin on Costco versus Nvidia? Like let's be real here. Um, let's see if I can just chart this out on Fiscal real quick. Nvidia, Costco. Let's look at PE. Yeah, that is incredible, dude. Oh my. Look at this. Only just recently did Nvidia take the cake. And then after this recent sell-off, if we even go quarterly here and bring this all the way to recent times, you can see they're almost the exact same price in terms of the multiple on their earnings. Okay, so it's very different. They're one makes a lot more money on the revenue that they bring in versus let's take a look at price to sales really quick, because this will give us a little indicator of Costco at 1.6 times versus Nvidia at 28.9 times. So Costco has a 1.6 times price to sale, but a 56 times price to earnings. Seems like a pretty high or a pretty low margin that you're paying. You're bringing in a lot of revenue, but not bringing in a lot of profit. Nvidia's 28.9 times, which shows essentially half the margin is going to the bottom line. If we then end up looking at, let's see, revenue growth. I don't want to see forward. I mean, we could, but that would just be unfair. Okay, nothing to show there, I guess. I mean, we could just look at it from total revenue. No, I want to see growth rates here. Percent changes on total revenue, and then we will take away total revenue. So Costco right now on a quarterly basis has an 8% growth rate. Last quarter, 9%. And putting that to Nvidia right now is at a 69% and maybe falling. Maybe we get 60% versus 8% for Q2. I don't know, man. It seems like an awful lot to pay for a company that isn't growing. So let's see here. We'll even index it to 0. So if we take a look at total revenue, sorry, it's under my camera. And then we'll index this to 0. And then we'll look at it like, actually, I want to see the let's do this. What's going on here? What did I ruin here? Why is this going down? Oh, because it's doing a growth rate. So that's funny. I could do this. So yeah, it still doesn't look great. It's not a great chart to show. But essentially, whenever you look at something and you index it to 0, you can see what the growth rates would look like over time. So over time, you could see how much Costco is adding versus how much Nvidia is adding. So over multiple quarters, where if they were to have been flat, the next quarter, Costco's revenue would have declined by 2.9% and then up 42%, then back to only 4%, 5%, whatever, where continuously the growth rates on Nvidia would have continued to climb it up into 5, 6xing the business over the last couple of quarters. That's what it's trying to show here, but it doesn't look as great. But that's why we fiddle around with these charts till I get something that actually would look nice. We can also look at net margin or something like this. Let's just play around for a sec. I'm having fun. Because if this isn't like something to look at really quickly. So Costco on their 1.6 times price to earnings, price to sales, their net profit margin on the quarter where NVIDIA ended up showing off theirs, NVIDIA 50%. This doesn't even seem right. We were not at a 97, 101% net profit margin. Am I still indexing? Okay. Yeah, I was indexing to 0. I was like, what the heck is going on? Okay. Yes, these are the correct numbers. 42% versus 2.8% for Costco. This is how much, they are actually bringing in on the amount of revenue that they bring onto their business. 2.9%, 2.8%. Last quarter, very good, 3%. NVIDIA, 28%, 45%, 51%. These companies are being priced at the same level on this growth, by the way. The same price to earnings ratio right now. The same. Now, let's do this. Let's take these factors and then let's look at PE, which we said is matched. And they're both expensive. I'm not saying 56 times is expensive, ladies and gentlemen. That's very expensive. So then let's look at forward PE, and then we will look at free cash flow as well. Forward PE, remember, they're tied for PE. So this is the last 12 months. Forward 12 months, let's just take a look really quick. Costco went from 56 down to 51, so it's improving. That means they're growing. NVIDIA went from 56 down to 35. Wow. That does not look even. Okay, so whenever I say that growth names and all of these are expensive, it's like expensive compared to what? These are the defensive names that are green today. People are leaving NVIDIA thinking that AI, after all the use cases that I just talked about, artificial intelligence, people are fleeting these names and running into Costco. And I love Costco, power user. But a good company doesn't mean a good stock. And it was a good stock. Okay, I see the margin expansion here. We've gone from 31 times, or actually I can even zoom this out even further. Maybe we look annually. And the growth rates would be different here as well. But, this is forward, sorry. Let me hide past. Yeah, I mean, I actually did not see the margin expansion that I thought I would. Oh, sorry, this is, what time frame is this over? Okay. 2021, 35 times, 38 times. At one point being 61x. That's crazy. See, NVIDIA, that's so funny, right? Like looking just at PE doesn't make any sense. This is why people say high PEs don't like how can you buy something that has 100 PE? NVIDIA at one point was a $250 PE, or sorry, 250 times PE. But if we look at market cap, and actually, let me just transition. Okay, I have so many things to show you guys because this is a really useful tool for me. But if we go ahead and hide this really quick, or actually, no, what I wanted to do is hide Costco, bring this back. They had a 250 PE, which people have historically told you to think was expensive. But then you look at the market cap of the business whenever it was that time frame in July of 2023, and the stock was $1 trillion. Today, we're at $4.3 trillion, much higher, and yet the PE is much lower than where we were before. Now, if you guys are seasoned investors, this is completely obvious. The earnings grew, okay? That's not hard to see. But this is why we don't just look at PE, we look at so many other factors, like forward PE. For example, if we hide this, well, the PE was 250. The forward PE was 48, meaning that the next 12 months they think that the earnings are going to essentially 5x. And then as the stock had gone on, they actually thought, okay, well, this is down to 19.8x. 19.8x on a forward PE basis. It's absolutely insane. Okay, let's bring back Costco as an example, and then we will take away. Let's erase it all, actually, because someone I saw in the chat talk about capital expenditures, but capital expenditures don't matter if you don't look at, do I want free cash flow margin? We could do free cash flow. Let's just look at, no, that's not going to make any sense because obviously NVIDIA is a much bigger business. So let's give Costco the benefit of the doubt. So we'll do free cash flow margin. So whenever we're looking at, it's lonely in here, says this guy's username that I'm not going to pronounce. I do have a Twitch. I don't remember what it is. Future Investing, I think, or something. If you guys want to go join this guy on Twitch, there you go. Yeah, usually it's better whenever I have the chat on screen, so then Twitch and YouTube can talk. But I'm just going to keep that down for a second. If we look at the free cash flow margin, and let's bring it a little bit more recently, so then we can actually see the data here. Costco has been holding a rough 3%, 2.5% free cash flow margin. Well, NVIDIA, even though having, well, actually, their CapEx spend is insanely low. But in case you're worried about CapEx spend, NVIDIA, it has a free cash flow margin of 59.43%. Unbelievable. So someone in the chat, Paul, said Costco is boring. I'm not saying this to, highlight that Costco is a good buy. I'm saying that this is what people are fleeing away from. You want to secure the gains on your growth companies. You're going to pay for extreme premiums and things that aren't growing. Like, what are you fleeing? You're fleeing the high premiums of companies that are showing you real growth, and not even just the growth rates. Like, I'm not just looking at a forward basis for NVIDIA, because here's the thing. A forward PE is based on predictions of what they think NVIDIA is going to do. If all the Mag 7 names, hyperscalers, everything come out and they say, hey, we're actually canceling our plans, we're not buying any more Blackwell chips, that's coming to an end, well, then a PE means all, okay? Doesn't mean crap. It doesn't mean anything. But if you look at from a trailing 12-month basis, Costco is telling you that you have to pay 56 times. Well, not Costco, but the market is telling you that if you want to buy Costco, you have to pay 56 times today. Plus, in the future, we're still expecting 9% growth, 8% growth. For the rest of your life, you might get 9 to 8% growth. That's exciting. I get that. But, like, Warren Buffett is the pinnacle of value investors, and he won't touch Costco. Like, I don't know. It's too expensive for Warren. Watch your profanity. I did watch my profanity. It got bleeped out. Where can I watch the uncensored version? That's on a different platform. I don't know. I tried to think of one. I couldn't. But overall, the market is just being crazy. Pay for growth. That's what I like. That's the way that I think that the market should act. I think that's the way it will act over time, because then if you don't pay for growth, if what happens to Nvidia is it gets sold down to $90-$80 per share on fear, then you get large pops. A stock goes from $80 and in a few months it goes up to $180 because the market realizes that it was severely undervalued. So you get a lot of alpha there. SoFi. SoFi is similar. If people flee SoFi in the pursuit of JP Morgan, American Express, what have you, in the financials game, Capital One, you're going to have to face the facts that you're seeing slower growth for a company that has a less chance of being blown up. But what are the real chances that those companies get blown up? I don't really think it's I don't think that's going to happen. I'd rather aim high and miss than aim low and hit. I enjoy the sentiment. I don't know if it works too well in markets, but yeah. Let's see what else. Do you think Powell's going to be hawkish or dovish this Friday? Well, I don't really make too many judgments on that. However, there was a report I wanted to share from wherever I saved it. Here. Where it ended up talking about how during the FOMC meeting, or the minutes today, they said the majority saw inflation risk outweighing employment risk, which I actually think is more damaging, employment risk to SoFi specifically. Now that's the majority, okay? And that, inflation risk is more severe right now because of effects of tariffs, which could take some time. But there were still some that actually ended up saying that, employment risk is equally important or even more important. It just definitely was not the majority. So it is definitely hard to pull from what you take from that. I mean, I think that does sound a little bit less like they're going to cut rates. I think the market also said a similar opinion. Let's go ahead and check the Fed minutes right now. Yeah. Yep. You see a growing rate. This was not too long ago, maybe, a few days ago that we checked this, where the easing chance in September was at 100%. And we were really debating on whether there was going to be 25 basis points of cuts or 50 basis points of cuts. Now we're seeing an 18% chance that Powell just sits on his hands and does nothing. I hope they cut. I think they will. If you were to flip a coin that had an 18% chance of landing on one side versus an 82% chance on the other, I'd probably bet on the 82% chance. But that's just market sentiment. They just happen to be pretty accurate in their judgment. Doogie says, they will cut. I didn't listen enough. And then she said, they will cut. Okay, Doogie. Okay. I'll listen to you. Thank you for your $1. Oh, I can turn the chat back on. My bad. If employment numbers are as bad as advertised, we could see a double cut. But that's why I think the market is a little bit worried about their idea of saying, hey, you know what? Inflation risks are much more important to us than the unemployment risk, because essentially what that tells me is that, hey, we see the data, but we're less concerned about reacting to it than what we are whenever we see, tariff policy changing, which can be scary. I also do see those numbers and go, okay, it's time. But then they come out and they say, yeah, well, it's not as important to us. Well, then, I don't know. Well, I'm sitting on the shoulders of giants here. I need a haircut? You're telling me. Hey, Tanner, is that accent wall behind you purchased from Costco? It is. Buy Costco stock because I have products from that store. Well, I've got an NVIDIA GPU in my computer as well, so now I don't know what to do. No, the truth is like I said, I'm a power user of Costco. Love Costco. Also, it's not an accent wall. It's just unfinished. I just have to finish this last part, but I have to cut the tiles to match that small space. I don't want to do that. So I just, they're just sitting in my closet. Does it look like a McDonald's wall? And maybe it does. I guess they might do similar paneling. What's your go-to bulk purchase? Probably protein, like ground beef, chicken thighs, chicken breasts. We always have pounds of beef, and I'm aware, guys. I don't need to get the things about how I should go buy a cow or whatever, and pre-butchered or whatever. I'm not doing it. Okay, I don't want a chest freezer full of meat and have to eat every last part of it. I hear it every time I say that I buy meat, and everyone goes, do you know that you can buy meat much cheaper if you just buy it in bulk? I get it. I buy my meat from Costco. Leave me alone. Okay. Carnivore. I wouldn't say I'm a carnivore. I'd say I'm an omnivore. But yeah, I do eat meat. Does your dog eat well? Probably not. My dog eats like kibble, I guess. I don't know. It's not like a raw food diet. I hate meat. Yeah, I mean, it's up to you. Okay, let's stick to the stocks. I saw this report from many people, but this is exactly why. Now, I wouldn't bet on OpenAI for these reasons, but this is exactly why I would feel very comfortable with OpenAI, because they're kind of going down the path of the Microsofts of the world for artificial intelligence, where they sort of have to solve every single problem. I mean Microsoft in the early days of computing, what OpenAI could be for artificial intelligence. OpenAI sees the firm selling AI infrastructure services in the future. OpenAI is considering eventually helping other businesses tap into data centers and physical infrastructure needed for artificial intelligence. OpenAI is not actively looking at such efforts today, but is focused on securing compute capacity for its own operations. But she said, I do think about it as the business down the line for sure. Cool. Essentially, the way that I see that is, of course, maybe they end up acquiring a company like, CoreWeave or something like this to get into that space, a company that they work with so heavily. But I know that they also want their own custom silicon and everything eventually down the line. Either way, if OpenAI ends up going public, it'll be one of I'm buying it. I'm buying it. I'm buying it. And maybe this is how Palantir investors feel about their investment. Like, you see a generational transformational business and you just go, oh my gosh, they will be a massive player regardless of how the space shifts. That's how I see OpenAI. Now, I don't think that they're the only player. I think that there's going to be many massive players along the way. I think that Microsoft's still going to do very well. I think that Google is doing amazingly. You know, Amazon's still going to have AWS, and they're still by far the biggest player. But yeah. I also think Palantir will be huge. It's just, what are you willing to pay for them being huge? I think Costco is going to be huge. Okay. But I think paying 56 times for them today is ridiculous. And I think paying what is it, 250 times today or whatever it is. I mean, they've drawn down quite a lot, is a lot for Palantir. Nice zit, Tanner. Yeah, I got a little thing on it. That's not actually the color of the zit. It's like the cream or whatever that's on it. But I just have a big white thing on my face. But yeah. I don't know what it was. Maybe it was my pillowcase or something. I just woke up and I was like, what the I'm like almost 28 with this big head on the side of my face. I was like, oh my gosh. I don't usually get too much acne. Eating bad food? Maybe. Maybe. No joke, SoFi versus Hood, the premiums per cost is about the same. Are you talking about on the stocks? Or versus their growth? Puberty could be. Could be puberty. Citi and JP Morgan both upgraded SoFi add to the community fund. Piyush, yes, we have to do that. By the way, I still need to update the fund. I know I've been super slacking. I've just been having busy moments lately. He's on the roids. I don't usually think that you get acne from a lot of... I know that you do with like on your back and stuff. But I don't have any back knee. None. And my traps aren't big enough to show any sort of steroid use at all. Prove it. I didn't do it for 10 grand, Dookie. Not going to happen. What? Liver King got him. If that is at all a true story, I'll take back my laughter, but that would be insane. I know that he got arrested and everything for going down there with like a suitcase and a gun and everything. That was crazy. Okay, yesterday as well, we also talked about why I'm such a believer in tech companies, why I will pay a premium forever. And by the way, I don't even think that we're paying that big of a premium for big tech. I mean, we do over the S&P 500, but there are individual names that are very expensive. And then there's ones like, Amazon, Google, NVIDIA that I actually don't think are, the premiums are that severe. However, one of the reasons why I said that I love these names and why I think that they're going to continue to take over the indexes is that their pricing ability, their flexibility is unlike anything any other company or any other industry has seen previously. They can deploy products worldwide. They can lower their expenses, automate workflows that would usually take more human capital that you have to pay more to, all of these things. Now, artificial intelligence takes that one step further. But in hard times, tech companies are able to shift their pricing to meet their customers where they are. Amazon just unveiled a discounted Prime membership for young adults aged 18 to 24 for $7.49 a month or just $69 per year. Nice. Now, what I think is so great about this is that it's not a matter of the money for them in the actual discount. It's about taking market share and securing customers that will grow into full-time users, not just for Amazon packages and the, small product purchases that they want for these years today. It's about securing them for whenever they want, their healthcare set up with Amazon, their grocery delivery, their Alexa Internet of Things completely provided by Amazon, the Amazon Internet through Kuiper. All of these things that they are securing by getting the youth on Amazon Prime early. Okay? Their entertainment, their sports, everything. You can only do this with, great technology businesses. And this allows them to be so reactive to markets and a recession or a downturn of any sort. Amazon has those abilities to be flexible. Okay. Love this. It's exactly what we talked about just yesterday and why I'm not panicking about any sort of sell-off. This is, an overreaction to what I think is still the best companies in the world that are facing no real bad side. Let's see. Probably should have sold ASTS at 60. What are they at today? 45. I mean, the truth is, how would you know? This is not a name that I follow. If they're fundamentally growing as well, and you believe that they are taking market share in the respective, space industry or whatever, then great. But if not, and it's built on hype rather than, the actual quality of the business, then yeah, you probably should have sold. But if you're worried, or if you think that, their success will be more long-term, then I would not fret the change in pricing. Tanner, would you buy Palo Alto? I'm sure I would. Seems like a name that would fit into my portfolio very well. But right now, I'm actually not worried about buying new positions. Whenever there is sell-offs, I look to get more of the things that I know very well. I hate the way his head's shaped. Are you talking about me or Jeff Bezos was just on screen? Careful with your words. You have 60 seconds to answer. Good luck. I'll keep your question on screen until you answer. Mods, get ready. We can wait. We have all day. It's not looking fortunate for this guy. He's not saying anything. Absolute scaredy cat, which is not what I was going to call him, but I know that some people have their children in the room. I said Jeff. Okay. All right, you're safe. Also, thanks for being a member. I appreciate your $5. I'll spend it. I didn't know this was the CCP. Should have learned. If you want to role play an American, better respect our freedom of speech. Someone ban that guy. $2 for head surgery. Okay, thank you. Appreciate that. Okay. All right. Let's get back to the what's important. Shift 4. Shift 4 is important, right? Let's see what the stock is doing. Shift4 green? Shift4 is green today, up 0.3%. Now, on the last, wow, they're green in the last 5 days. This company has not even been reactive at all to, I didn't even see this. The market was having a spat. Shift4 just brushed it off. I mean, they did see a small dip today and then immediately recovered like everything else. But guys, I'm just joking. It's an entertainment show, okay? We talk stocks. We like to have a little fun. Are you fun at parties? I'm having doubts. I'm seeing a lot of people having good laughs. Some people see the joke here. Other people are like, "Oh, his Canadian is coming out." They're getting all political, thinking like, it's called a joke. Now, Shift4 is proud to partner with the Lions to power concessions and retail sales at the Ford Field, as well as ticketing transactions to deliver a seamless fan experience. Now, if you're doing ticketing and powering concessions and retail sales, that is the full combo. So this is a full integrated partnership with Shift4, another stadium. By the way, they're the largest player in stadiums and entertainment in all of America. And now they continue to gain even more market share there. Why? They have the tools, they have the cost structure, they offer their payments at very low costs, so they continue to win. The giving block, as you can see here, the giving block, well, maybe you can see by the little logo right beside there, there's a Shift4 logo. They're owned by Shift4. Calling all nonprofits. Sign up with the Giving Block by September 30th to receive a Bitcoin donation bonus of up to $2,000. And participate in our exclusive giving season fundraising campaign with over $100,000 in donation prizes. Book a meeting today. Going hard on the posts out to increase their overall amount of payments. But yeah, I thought that was very good. I'm actually really happy holding Shift4 right now. And I love that their CEO just recently purchased $16.3 million of its own stock in just cash purchases of Shift4, increasing their total ownership stake. By the way, Jared Isaacman's the number one shareholder of the company. So for him to double down and want even more. Did I say CEO? He's the founder. He's not the CEO right now. He just stepped away from being the CEO. He is the chairman. But yeah. Tanner has implanted a pearl on his cheek. Pearl cheek. Okay, someone ban him. We're going to get them all eventually. Ownership stake. Yeah. Founder CEOs. Yeah, I don't know what it is whenever you're just a founder, step away from the CEO chairman, but then you get unemployed because Donald Trump fires you. And then you step back to your business, but you're no longer CEO. Are those guys good? I don't know. I don't know how big the sample size of that has happened previously. Duke Pie says, "Can I ban someone? I want to ban someone." No, I feel like Dookie Pie as a mod would actually be pretty. I mod like the most tame people. The people that see what I'm doing and then laugh about it. What is Shift4's growth rate, Tanner? Well, it depends. Okay. I think last quarter it was like 18% or something like this, 18, 19%. But their 3-year goals, which they've always hit and exceeded, is currently at 30+% compounded annual growth rates. Yeah. Be careful banning people. I was going to point it out just to be helpful. I must have missed when you said what it is. Be careful. You almost got banned for real. Let's see. Lol ban me. Curious what happens. Nothing happens. I don't think you can write into chat. I think it just puts like a locked box on it. You still watch. You're not like, you can't not watch. Yeah. I don't think it removes you from the stream. See, that's the thing with Twitch. Their tools for for moderation are so much better than Twitter or than YouTube. Live streaming is pretty new on YouTube, and they're making some changes, but it's been around for a long time and definitely not changing as fast as I would have hoped. Did you guys see the Made by Google event today? I thought that this was decently interesting. We ended up seeing a whole line of new products. So this came with the Pixel 10 lineup, and pretty interesting. So not only did they announce, new Tensor G5 chips and everything, but the Magic Q was really what I thought was quite interesting. This was essentially built into every function of the phone. So if you have something in your calendar, in a Gmail calendar, that Google can see it and push it into all of your other products. So if someone says, hey, can we make sure that we're doing this at 10 o'clock, you say yes, it'll say, hey, you want me to put that into your calendar? Sure. Someone says, hey, are you doing something next Friday? It'll pop up and say, you are doing something. Do you want to let them know about it? Or do you want to free up that space? Like, it'll give you some options into adjusting your calendar. So then you don't have to go from app to app, making sure that everything's working. It's just all together. But this is the beautiful thing about having Gemini and your text messages and, all of these different functions all under one ecosystem. Is why Google's so powerful. And then what I can't see the foldable phones being too durable. Yeah, I've never gotten into the foldable phones, but this is not their first edition of them. They've been around for some time, these foldables, but I'm not a current buyer of them. I don't really see the benefit. Does it remind Tanner when his stream starts? It could, but you know what's funny? I don't even have my streams in my calendar. It's just a daily habit. Like, do you calendar block out to brush your teeth? No, I go live at 7. So, and sometimes we don't. Sometimes we go a little bit later, but usually that's because the problem with going live at this time every day is like, all right, well, that's usually whenever people want to go get dinner, do something else. You should see me on parties on Friday. I mean, I'm just not catching invites anymore because I'm not going. I've got, the Big Tech Frenzy and then the FinTech Friday show. But I genuinely, like, not to be parasocial with it, I love hanging out with you guys. It's so much fun. And I know text is hard to convey emotion sometimes, but like sometimes I feel like I understand some of your guys' personalities. Like Doogie Pie is such a personality in the chat. Unhinged sometimes. Completely unhinged. And then she asks to be a mod. It can't happen. But that's okay. He's great at reading charts, tables, and graphs, but can't read a clock. Yeah, I mean, that's true. I'm also just not that generally good at reading numbers. Just somehow, I mean, we get it. Give Dookie mod or we riot. Yeah, ban him. I'm banning him. I'm gonna ban him. Dookie, we love you. But just, you have already said, you give me mod. I want to ban someone. I want to ban, like, you've already shown your cards. So, like, come on. The riot started. Yeah, power corrupts power always. Am I stupid for buying Palantir here? No, I don't think so. If you're a long-term believer in the company and think that they're going to accelerate earnings and see a pathway for that, then no. Especially if you have, you don't think that there's other software names that are going to do as well. But I do like to look at other names and think, okay, well, there might be a company out there that's growing at half the speed, but is 1/10 the cost. Just mathematically, that seems like a better option. But maybe you're buying second place, and I don't really like buying second place. I guess I'm trying to say that I'm not here to be bearish on Palantir. Hasn't worked out for me, and every quarter, it's not just that expectations are set high, but that they dominate those expectations even further. So, like, if they continue to increase earnings every single quarter and increase those margins, then sky's the limit for Palantir. If some of the customer use cases that have come out and said, hey, you know what, this has completely changed our business and everyone needs this, if that continues to happen to more and more businesses, we have not seen the top for Palantir. If there is a quarter where Palantir misses and people, see lower than expected growth rates on Palantir, you're going to see a crash of a lifetime. There are worse things to buy than Nvidia and Palantir. I think that's a very, very good, thing to say. When does SoFi pass your Nvidia position? So Nvidia would need to stay flat, and then SoFi would need to almost 5x. So if Nvidia stays here and SoFi's at $100 per share, it'll be bigger than my Nvidia position. So we got a bit to go. But doesn't mean I'm not bullish on SoFi. I just updated my portfolio for all of the course members, and I was looking at it and I was like, you know what? It's crazy that over the past month or whatever, because I make my purchases, but then I don't really actively okay, these are all the purchases that I've made this month, and then sort of add them all together and look at what I've been bullish over the last little bit. I've just been buying mainly SoFi, and it was by far the biggest ads that I did over the last 6 weeks. So that was really exciting to see. Google, Amazon started, SBET started, Shark Ninja started, AppLovin, these sort of ones, but yet SoFi was still by far the biggest ad. What do you think of double leveraged ETFs? I don't really like them. There's some balancing to them. The cost of the actual margin that you have to factor in. So if you look over a long time frame for them, you'll notice that they aren't double. Okay, and so if you're going to be playing them short term, that's fine. What's the it's what is it? SoFi over the last 3 months up 72%. What is it? SoFX? Is that what it is? Um, well, actually, that one's done pretty well. If we do, they even have? Oh, it started January 16th. So if I go back to SoFi from year to date, it should be up around 21.5%. I go year to date, it's up 50%. That doesn't look right, does it? SoFi 50%, but the double leveraged ETF 43. I guess the downturns are even more downturn EE. Let's look at one that might be around longer. AMD 35%, 45% over the last 3 months. AMDL. Yeah, larger on the 3 month than a 2x, but just about the same level year to date, 35 versus 40. So use them for the short term if you want. I'm not going to ever touch them, but I don't buy them for the long term. Some people buy like TQQQ and sit on that forever. I don't agree. Yeah. Do you have VOO? Not right now. I used to buy VOO, but not right now. Is a rate cut already priced in for SoFi? I think that the market is pricing in a rate cut for SoFi as highly as the market is pricing in a rate cut. So probably 80% priced in. I mean, generally the way I think markets work, I don't know if you'd consider that efficient market, like an efficient market example or not, but there will be a healthy bit of skepticism in a rate cut, and that probably goes across all equities. You're still going to see a pop on rate cuts, even though most people still think we're going to get a rate cut. There will be some that didn't, that will buy in after that news is guaranteed. Tanner ignoring me today. You've been typing poop into the chat for the last like couple minutes. I'm not ignoring you today. I don't see a question. Give me a question. Robert asked you about your face. Yeah, it's cream for a zit. I asked you multiple times, Tanner, do you think Gemini 3 being better than GPT-5 would be bearish NVIDIA or bullish? Bullish. So I think more use cases and more demand for artificial intelligence will be beneficial for chip designers. Okay. And Google is a large purchaser of NVIDIA chips. So yeah, definitely bullish, not even 1% bearish. Do you think Jerome Powell is predictable? No, I don't think that betting on markets is predictable. There is a famous quote, I forget who it was from, that said, if you can predict the interest rate decision, I think it was 3 or 4 times in a row, you could be a billionaire. And because the truth is, it's absolutely extremely hard to do. Let's see. Someone who was short Palantir posted a tweet, but deleted it as it was going up. High profile guy removed the tweet. Yeah, I mean, it is the funny thing that, like, even I saw RAM today. Someone pointed out how SoFi went below $21 a share, and RAM came out again out of the woodwork. We haven't seen him in a decade. I'm lying. I'm being exaggerative here, but this was a very famous institutional investor, if you can even call him that, that was extremely bearish and potentially even short on SoFi stock. He said to short SoFi and go long Dave. Now, to his benefit, Dave did unbelievably. So I'll never take that away from him. It was a great call. But he soiled that performance by shorting SoFi. The funny thing is that if you were to just be bullish on markets, which is what I tend to be generally, I'm bullish on the idea that founders and operators can solve problems. So even if a company has a problem, and I don't think that they're going down the right path, that doesn't mean that they're just going to head on bang their head against the wall until the company dies. That usually is not what happens. Even in like Cash App and all of these companies that I've like torn apart because of the direction that they're going, I also think that Cash App will be fine. But RAM comes out of the wood after saying nothing. Like, even he had this live stream or whatever that people were in and asking him about SoFi while it was going up, and he goes, "Oh, why do you have to talk about that? I'm so past that, blah, blah, blah." And then he's out here whenever, SoFi is at 22.05, which, by the way, today it closed at 22.52. So it's already recovered from this pricing. RAM comes out and says, "Oh, not good." Okay. Yeah. DDI. Seriously, RAM? Like, come on. What is going on? He sees the first sign of blood, and these bear sharks come out of nowhere and they feast. It's hilarious. Where were you from $5, which is whenever he said that he did not like SoFi, to, frickin' where we are today? I mean, it's not even remotely close. He's some founder of some I don't want to take away from his credit. I'm not here to despair. Like, I'm not here to take, but it's not a very large firm. But it is some sort of crypto equity based, like they're, I guess that would be considered a hedge fund in some way, where they're playing in multiple asset classes and doing whatever they can do to increase their return for their shareholders. But overall, it's just been a terrible call. He can't let it go, but yet he only comes out whenever things get dark. And these people are the worst types of people, where they say, "I told you so." Something like this. Or even the people that are doing laps around Palantir as it falls. It's like, guys, it's too early to say that Palantir was overpriced and now it's heading back to some reasonable valuation. You don't say that after a 15% drawdown or 20% drawdown. Tanner, would you rather not own Walmart or Costco, but you need to hold one of them? Walmart every day. Walmart's a really, really interesting name in the e-commerce space. Costco could be that way, but they're not really doing as well as I'd want them to in that space. Add SoFi. Thank you, good friend. I appreciate it. Your name has changed, but if I remember, your name's Kevin. I think in your actual username it says Kevin, but in the it just says K. Yo, Mr. Mustachio. Did you buy any of the dip in the last couple of days? Not really, no. I like my classic DCA that I do, but not into any specific names where I'm going heavy or anything along those lines, no. Thank you for the donations, guys. That's very kind of you. The two donations here we will end up putting into SoFi, which is awesome. $20 a SoFi. I'll make sure I do it tonight. And backdated for every single one. Like no one's going to be missed. And I'll make sure to get them all done. It's just I take a screenshot of all of them, so we have a record of every single. Well, and YouTube keeps a track of all the donations. I got Beta Cash Coach. This is what I've heard from a lot of people, that they're really pushing it out now. What stock should I buy? Go talk to a financial advisor. Has a MIT landed in Miami? I don't know. Do you use AI to trade? No. I was really actually thinking about getting a Labubu doll for the set just back there, but ended up not doing that and saved myself like $80. Can I buy your mustache? No. Well, I mean, maybe, I don't know. Like specifically mine? No. I never understood that. Like, whenever, now I'm not comparing myself to any of these people, but like whenever people like have a napkin of someone's and they're like, oh, this is a LeBron James napkin. Like he blew his nose in this. It's like, bro. The guy knows how to throw a ball into a net. And you're holding his snot in a rag in a sealed glass case, you freak. Like, just, I don't get it. I don't get it. Time for a Shark Ninja video, Tanner. Add to Shark Ninja. This is JS24. Oh, cool. Okay. Absolutely. Let me screenshot that. Tanner, can you send me your socks? Yeah, I'm good. Who's selling that napkin? There's, for real, there's like eBay, like there's a market for it. It's a real thing. I swear it's a real thing. And socks and everything like that, items of clothing. It's really common. Well, I don't know how common it is, but like it does happen. Usually for ultra famous people like the LeBron James or a Jay-Z or like ultra fame. Celebrity fame though, not just well, sorry, I meant to say, of course, fame is fame. But I bet you there's socks of like Tom Cruise or Brad Pitt or something like this out online right now. Oh, my dog's getting up. Let's see what else is. What's up, baby? Let's see what else I have saved. Oh, this is another good one. I wanted to talk about this. There was a report that ended up coming out that crypto industry experts are urging the UK to embrace stablecoins as financial infrastructure, the report says. So, some 30 industry executives have urged the UK to launch a stablecoin strategy, warning the country risks falling behind the United States without embracing these price stable assets as financial infrastructure, according to a media report published Wednesday. To ensure the UK is at the forefront, we believe a proactive, coordinated national strategy is needed, that one that positions stablecoins not as a risk to be contained, but as a financial infrastructure to be responsibly embraced. I love this idea, but also it goes back to the ideas of me being super bullish on Ethereum. In some way, very similar to the data center buildouts or many of the technologies, or to some degree, a defensive strategy. I was going to say weapon. It's not a weapon, but you either also use your own stable coins like a USD. There is a USD, or sorry, Euro C. That's what it is. I was going to say, what's it called? Like a USDE? No, it's Circle's Euro. There's a bunch of these that are in other, currencies that could also be adopted around the world, but taken more seriously, where not just private companies are allowed to operate using these products and the consumers, but also governments and, the Federal Reserve, these sort of things. And it all goes down to help Ethereum, help a lot of the blockchain companies that we're involved with. It helps Robinhood. It helps Coinbase. It helps crypto infrastructure plays. It helps SoFi to some level of a degree, right? Crypto, like increasing the utilization of cryptocurrency allows for companies like SoFi to expand internationally much faster. How does China outlaw crypto mining but still come out with their own stablecoin? Well, that's just showing you how unbelievable the technology really is. Now, I think there is a difference between the utilization of a stablecoin and the utilization of Bitcoin, which, like, if you're talking about price manipulation, it's very hard to do that to Bitcoin because the market cap's so large, right? You need a coordinated effort of the biggest pools of money to alter the price of Bitcoin while still taking any sort of benefit from that. Whereas a stable coin is still just backing the same dollar that China has been known to manipulate. Maybe I'm not making accusations. I'm just saying it. There have been some reports on that. So I think that does not change the government's strategy of, like, doing what they want with their dollar, but also doing it on a better payment rail. Incentivizing Bitcoin is stepping away from your dollar. It's something that you can't control. And I don't think that China wants to do that at all. So stablecoins still allow governments to be in control. Just at cheaper costs, faster settlement, higher security, stuff like this. Well, I mean, without my ignorant take is that, yes, that is what it's about. Bitcoin is hard to control. A government-owned currency where you are the printing press of your own dollar, you are the burner of your own dollar. Stable coins don't change that. Now, I'm not talking about a US dollar stable coin, because then you're giving the control to someone else. But a, Chinese yuan or yuan stable coin through Circle or Tether or whatever would still be their currency to control. if you're going to buy crypto, Ethereum is the only one you should buy, in my opinion. I think there are other ones, but I think Bitcoin's exciting. I think Ethereum's exciting, and I think Solana is exciting. But Ethereum is especially after the latest, like all the largest companies coming out, and you're seeing which ones JP Morgan's working with. You see the ones that PayPal's working with, Fiserv is working with. These companies will set the standard because there's network effects, right? Can you explain what makes you bullish on... My dog's getting excited. She thinks someone's here, but they're not. Can you explain what makes you bullish on Ethereum? How do we know stablecoins will take off? Well, it's just like... Okay, my dog's really freaking out. One sec. Okay. So essentially with Ethereum is that the way blockchain is essentially set up for them is that there's a whole bunch of quote unquote nodes or computers that are verifying a transaction all at once. There's no one point of failure. It has to be essentially community verified, and you are staking your wealth on if something is verifiable and true. So if you're going to lie and say, hey, you know what, this fraudulent transaction is actually real, and a bunch of other nodes have a majority and say, hey, no, it's actually not, you had to put up money to make sure that that transaction would go through. And so that stake would get burnt. So I think that there's a very hard way to try to, delegitimize Ethereum. It has happened before, but you're not probably going to see that again because just the size of the overall network, the larger it is, the harder it is to crack because you need, such a percentage of the overall market. But yeah. Then what makes me think that stablecoin is going to take off? Well, the way that it is, it's essentially just internet money that's not laying on the same, it's literally nodes and code set up on the internet. If all the computers shut off today, Ethereum would still exist. But there doesn't need to be a human interacting with Ethereum to keep it online. There's no server that makes it stay up. So what's really interesting is that if you're transacting from a wallet here and sending it to another wallet, beside me in my house here, it would be like sending an email. What's the cost of sending an email from here to my friend? It's instantaneous. It's, to us, it's essentially free. There is a gas fee for this. What in Ethereum you call a gas fee, in what you would call that in a cost of energy, or the cost of the actual compute. You're paying someone to generate that compute for you. But essentially, whenever you're talking about why it would make a lot of sense, is that if I wanted to send money from my wallet here to someone in my own house, it would cost the same amount as if I was sending it to someone on the other side of the world, the same way that an email would take no extra time to go to someone else in the world. And so that's pretty freaking fast. The way it's coded is that all the verification, all of the double checks, all of the dollars, everything like this is perfectly sound, perfectly safe. So there doesn't need to be human interaction or anything that slows it down. There's no high fees. There's no government to pass through. There's no third-party companies that have to do double checks and everything. It just immediately goes through. So the speed is there, the time is there, and then the cost is based on the market, right? You get paid to transact those payments. It's all built into the actual code. So there's a level of inflation that happens on Ethereum to help pay for some of those gas fees. What I mean gas is like to actually have all these transactions go through. But then they also have systems that are set up to vote on burning Ethereum, right? To get rid of some of that inflation, to try to balance out the system over time. And the idea is that Ethereum's outstanding coin should actually go down. So I'm all over the place right here, but essentially, if it's faster, safer, and more reliable and global, why would it not take off? I think every technology that passes some of those statements of being faster, safer, higher network effects, that the world will adopt that over time. And I think we're past that critical point of will it be used? It already is. There are governments that are using stable coins. It's all like the check of reality has already been cleared. So, yeah. Value of crypto is cost of electricity / compute, infrastructure, and encryption. Cost and speed should go down if no price fixing. I think I know what you mean, but it's worded weird for me to try to agree with you. But yes, the cost of I wouldn't call it the value. The cost of cryptocurrency is the electricity and the infrastructure, the chips that are actually needed to perform, these transactions. But there are more faster and safer chains. I mean, that might be true, but then you need network effects, right? There might be a faster and cheaper solution than PayPal, but if 400 million people are on PayPal and there's a couple thousand on your new, chain that ends up getting developed, then, it's not quite worth it. What's great about Ethereum, in my opinion, is that it's scriptable and that you can have multiple applications the same way you can have applications on an Apple or Microsoft, for example. Ethereum should be looked at as its own ecosystem, like Microsoft. So if you're coding an app that can also do transactions and can lump transactions together and verify them together and do all of these things, then you can lower the costs of the transactions through layer twos, like Arbitrum or something like this. Who in here still believes in PayPal? I believe in PayPal. I just, I don't know. I still do believe in PayPal. That's for sure. But I think that the sentiment on payments right now is getting crazy because of cryptocurrency. Ethereum is proven insecure. Well, definitely. That's definitely true. Solana is the greatest thing about ETH. What? Do you mean like Solana has all the greatest parts of ETH? Is that what you're trying to say? They're two separate layer ones. They do not transact with each other. If Ethereum goes to 10,000, will Tanner save his mustache? Well, the mustache is staying for sure. But I do think Ethereum goes to 10,000. Like the percentage of the overall market, SBET actually put out a really good report on this. Let's try to find this. But SBET put out this report about the percentage of the financial ecosystem that is using Ethereum today and what percentage of the market could be using it into the future. And you need just the tiniest amount to go to much higher prices. I have it here. So just like any other, if you think of Ethereum like a technology company, you have to pay per usage, right? Think of it like a toll road. So right now you can see, so this is pointing to the $13.4 billion today that's on the blockchain for which 10.6 is on Ethereum. You can barely see, but that just makes up this tiny black dot. Okay. And then this growth opportunity that, SBET believes they're going to have, which is a $16 trillion opportunity by 2028, is a massive opportunity versus the global, as like the total global assets that could be tokenized, which is everything. The tokenization of all money, which what's funny is if it does happen, it could happen very fast, which is crazy. And I'm actually a very big believer that that's going to happen now. Not maybe all of it. I mean, cash does not make its way onto payment rails as well, but like look at the history of Visa. Money does flow digitally. Like if you look at Ethereum as the next version of, it's much bigger than Visa and MasterCard, but that we are going from cash to card, and now we're going from card to crypto. I think that you're going to see some unbelievable step changes in the growth rates of Ethereum and potentially other blockchains as well. But the great thing about Ethereum is that you don't, unlike Bitcoin, Bitcoin's kind of set in its ways, and there are layer twos on Bitcoin, right? Like the Lightning Network and stuff like this, where things can improve. But Ethereum is going to get better over time. They have these large updates that happen that improve, security, speeds, lowering gas fees, all of these things. And yeah. Solana already does everything that ETH wants to do with less fees. I agree. I'm a big believer in Ethereum or in Solana, but it's all about network fees. And if institutions do not, end up building out on Solana, maybe because of its concentration of investors, right? It is pretty centralized. Then maybe it doesn't catch a bid. Solana has competition from cheaper Coinbase stablecoin too. Yeah, but Coinbase's stablecoin is on Ethereum. That's an ERC20 token, meaning that all the gas fees that pass through Base, like, the applications that are built on Google, for example, like Google was built on what Microsoft built. It all just leads back to the main personal computer. Ethereum is the personal computer. And there are apps that are being built on that, but at the end of the day, it's still Ethereum. Why would it take off now? Well, I mean, the utilization of Ethereum continues to climb up. And there's been a lot of regulation in the United States that has changed Ethereum. And there's one coming up at the end of the year as well. So we just had the Genius Act, and now we're going to have the Clarity Act, which is more of the infrastructure layer. So massive policy changes is the real answer for why it's going to change this year in particular. And just like the same way, why would a company start using artificial intelligence now? It's getting better. It lowers your costs. It increases your efficiency. Why wouldn't you? Why hasn't companies before? Well, because they potentially thought that they weren't allowed. Regulation, like Gary Gensler was the Grim Reaper for companies that wanted to deal in cryptocurrency. They would set extremely vague rules and then rule over these industries based on enforcement, not by clear rules. So they say, hey, try not to do shady stuff. And then, okay, well, what does that mean? Well, let's start building. And then they go, hey, that's shady. Oh, well, okay, can you write that in? And then they wouldn't. It was very, very weird. I can't give exact examples that come to mind, but gray area overall. That is now going away. That's all going away. And that's in great part due to David Sachs and what the new administration is doing for cryptocurrency. Yeah, but you're saying Ethereum doesn't even work well properly without their L2s, but who cares? And isn't Solflare just a wallet? I'm pretty sure I have a Solflare wallet. I'm a big Solana guy. I'm a fan of Solana. You guys are not going to sell me on Solana. I'm a believer. Okay, I used to have Phantom and Solflare and all those other ones that I was really interested in. I'd stake right off those wallets. Wasn't building apps or anything like this. I was just doing it for the investment. But I really did think that was what was going to take off. But maybe people are worried about the centralization of the owners, right? Because the problem is that in cryptocurrency, just generally, changes are made based off the voting population of the shareholders of Ethereum. But if there's a few players that hold the majority of the coins, then those are the people that make all the decisions. But if you're like Bitcoin or Ethereum, where many people spread out the ownership, where not any individual person can or any organization can control the what happens, then you get more of a real vote of what the population wants to change. Oh, I just sunk. That's XRP, not Solana. No, Solana is very centralized. That I'm not asking for permission. I know that to be true. ETH for peace. I think he was in here helping me with a lot of the things. Yep, that is true too. Stabilization of the coins. I mean, I love Solana, but they have crashed more than anything. They crash constantly. But I love Solana. I do. Yeah, it does have a lot of popularity. Ethereum does, that's for sure. Okay, let's go through the things really quick, just to recap, and also take a look at some other names here. I heard that Robinhood got quite, let's refresh, quite the upgrade the other day. We didn't actually take a look at this. Oh, yeah, they did. Look at this bear market. By the way, we're in a bear market now. We've had 2 red days. We're in a bear market. Look at this. Bernstein goes from 105 to 160. Cantor Fitzgerald went from 118 to 128. Barclays stayed at 120. Compass Point, 96 to 105. Bank of America, 112 to 119. 98 to 104. 110, 106 to 121. Gotta love it. Huge upgrades across the board for Hood. Let's go to SoFi really quick. Just to recap this for people that didn't see this earlier, we got 3 upgrades today. 18 to 28 from Citi, 22 to 24 from JP Morgan, and 18 to 28 by Dan Dolev. We got to get Dan back on the show. Bro, what happened? I'm going to send him an email right after this, after I upload the donations to the community fund, and get the report from him if I can, because that's an upgrade. A single quarter, you go from 18 to 28. What happened this quarter? You guys wonder why I got bullish. I made some bullish comments about it, but like even in my latest video, I uploaded SoFi versus Chime, and I'm like trying to show why I'm such a believer in this company versus Chime, why I think that Chime should fall and SoFi should continue to climb. And like no one watched it. It was crazy. I thought it was good content. Chime, by the way, down 5% today. It's just been bleeding out ever since it came public. Like I knew whenever you're looking at these two businesses, they are great comparables. And Chime is not nearly the quality of what you're going to see from a SoFi. So just my opinion. Just my opinion. I watched it. I appreciate you guys. Did you like it? What coin should I buy? I mean, right now, the only coin that I'm looking at adding is Ethereum. Ethereum is the only cryptocurrency that I will be adding to probably going forward. I'm not a big crypto guy. Not meaning that I don't love cryptocurrency as a technology. I'm a big guy there, but I don't buy all the layer 2s and follow the volumes and try to understand these sort of things. That it's its own market overall. John, Dan Dolev is a Wall Street analyst from Mizuho Securities, and he's been on the channel a few times. He's like an actual suit, like a senior equity analyst that covers fintech and e-commerce. Call Steve. Yeah, I can call Steve. I can tell him about the SoFi updates. We'll see. Give him a call. What's up? I'm on stream. Hello?
Hello.
Hey, can you hear me?
I can hear you now.
You're on stream.
Why am I on stream?
I wanted to ask you if you saw the SoFi updates lately.
No.
The bunch of analysts have come out giving it $28 price targets. Multiple analysts today alone giving it.
Oh my God! Multiple analysts. Whoa! Stop the presses.
You love following analyst pricing and forward earnings predictions.
I don't care what analyst 1 versus analyst 2 says. I care about my own research.
Steve, you constantly reference what Wall Street is saying is going to be fiscal year 2026, 27.
I constantly reference the forward earnings growth. I don't reference price action.
Yeah, but what if I told you they increased their financials going forward?
Okay, whatever. What are they expecting the EPS to be?
Well, I got to check, but I'm just saying.
You don't even know. You don't even know. You called me up with a half-ass freaking story.
Well, I didn't think you were going to be so aggressive. I thought you'd go, "Oh, that's interesting."
I'm not being aggressive. You're not even researching this. I don't even know how you can do a stream without facts.
Well, I mean, we've been mainly talking about Ethereum and AI and the overall sell-off. Do you have anything to add on Ethereum?
Ethereum is going up.
Yeah, that's my prediction as well.
Ethereum is going higher.
Yeah. Do you want to hop on for a minute?
Not really.
I want to talk Ethereum.
You caught me at a bad time.
All right.
How long are you going to be on for?
Not too much longer. I've been going for almost 2 hours now.
Well, if you can keep it going for maybe 20 minutes, I can hop on in 20. I'm finishing my news article.
Oh, is it a name that I would like?
This article is called the Anti-Dividend Growth Article, Why Dividend Growth Investing Isn't as Appealing as it Once Was.
Yeah, I don't really care that much.
I'm going to really piss off the dividend community at the moment.
Yeah, sounds like it. By the way, I did just check the revisions. Overall in the markets, I'm looking at December 2025, 26, and 27, they've all gone up. And that's across the board, across however many analysts. How many is this?
I mean, they've barely gone up.
Yeah, but this is just from 2 analysts. So if 2 analysts change December 2027,
the street still has 55 cents as the EPS estimate for 2026. 21 analysts.
which is the low end of, at least we're in the ballpark of what Anthony Noto's been saying.
Sure, we're at the lower end of the band.
Yeah, but we were outside of that band, not long ago. We were at 47 cents.
Okay.
All right, you keep up the good work. You're a good role model.
No, you're a good role model.
Oh, you're making me blush. All right, I'll talk with you later.
I mean, you should really just shave the mustache.
No, bad advice.
Go do some jiu-jitsu. Even though wrestlers dominate. And did you see the UFC event this weekend?
I didn't see, but I heard the outcome.
Oh, dude, I called it. I said Hasna was going to maul this guy. Maul him.
He's a beast.
He's a beast.
But
I don't think he's going to have to move up and wait. I don't think anybody in the division can beat him.
That's actually not what I thought. Hamzat lost.
Well, I don't know what the hell you were watching.
I didn't watch. I just read the. I thought I read the card. Maybe I read it backwards.
I mean, obviously, you need to get your glasses checked because he won all 5 rounds. It's even arguable if the last round was 10-9. Every round should have been 10-8. It was a mollywop.
So this is on record. I was on stream last FinTech Friday. I said Hamzat would win. So I'm still clear, but I thought
it was a masterclass of wrestling.
Yeah.
Masterclass.
Yes. I believe you. I got to watch it though.
I mean, I don't know how you didn't watch it. What were you doing Saturday night?
I don't remember. He's part of what's his name's camp, right? Well, I don't think he's doing it anymore, but
Khabib's crew, yeah. He's from
Dagestan?
Tajikistan or somewhere else.
Dagestan.
Somewhere over there.
Yeah. Okay. I'll talk with you later.
All right. You keep being a good kid.
Thank you. Thank you, brother.
All right, later.
Talk soon. The guy's Dagestani, if I'm not mistaken. Can't be going out here calling the whole crew Pakistani or whatever he said. Yeah, he'll be on soon. Steve's not 27. I think he's 41. Yeah. Well, I don't know if from where? Khabib Nurmagomedov, I can never say that. Nurmagomedov is, I'm pretty sure he's Dagestani. Yeah, he was born in Dagestan. There, okay. You watched the video where he wrestled a bear? Yeah, he was like a kid, but yeah, I did watch that. Okay. All right. I don't know if we actually are going to stick around for 20 minutes for Steve. I mean, maybe we can do a video later on, but for the most part, I've covered all the topics that I did want to. I'm not seeing any comments. UFC equals rigged. I don't agree. Yeah. I'm not investing in TKO, but I like to watch it. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.